We get a ton of economic data every single month. Most of it's just noise. But every once in a while, a number comes out that makes everybody slam on the brakes. Well, that just happened with the U.S. job market. The latest number was a total shocker. So let's dig into what it is and, more importantly, what it actually means.
Okay, here it is, negative 32,000. This is the number that had everybody talking. According to the latest ADP report, the U.S. private sector didn't just tap the brakes in September. Nope, it actually threw it in reverse, losing 32,000 jobs. And let me tell you, nobody saw that coming.
And the reaction? Well, you don't need to be an economist to get this one. It was pretty blunt. Contraction. Not good. I mean, it's that simple, right? When the job market is actually shrinking instead of growing, that's a huge red flag that something big might be changing under the surface of the economy.
But here's the thing, a big headline number like negative 32,000, it's just the cover of the book. It doesn't tell you the whole story. To really get what's going on, we've got to look inside and see exactly where those jobs disappeared from, and believe it or not, where some were actually added.
So this wasn't some kind of thing where every industry lost jobs. Not at all. It's really a tale of two completely different economies. You had education and health services, which was the one shining star, adding a solid 33,000 jobs. But then, almost all the bad news was crammed into the service industry. We're talking leisure and hospitality, professional services. They took the biggest hits. Let's zoom in a bit. The numbers really spell it out. The biggest losers, just like we saw, 19,000 jobs just vanished from leisure and hospitality, and another 13,000 gone from professional services. But it wasn't just them. The weakness spread over to the folks who actually make stuff, too. Both construction and manufacturing shed thousands of jobs.
Okay, and here's what's making people really nervous. This September number, it's not just some random one-time bad report. Turns out they just went back and revised last month's numbers. And what we thought was a small gain, well, that's now officially a loss. So now we're looking at 2 negative months back to back. And that starts to feel a lot less like a blip and a whole lot more like a trend.
All right, so we've talked about jobs, but let's talk about what really matters to a lot of us, money, your paycheck. In a job market that's looking a little shaky, what's happening to our wages? This report actually gives us a really interesting look at what's going on in your wallet.
And the story here kind of splits in two. If you're someone who stayed put in your job, you likely saw a pay raise of about 4.5%, which is pretty good. But if you were one of the people who switched jobs, whoa, that number jumps all the way up to 6.5%. So what that tells us is, even when things are slowing down, making a move can still pay off. Big time.
So let's recap. We've got a surprise drop in jobs, but job switchers are still getting paid. Kind of weird, right? So what do we do with this info? Well, the reason everyone freaks out about this one particular report from ADP is because it's like a sneak preview for the even bigger economic movie that's about to drop.
And you might be wondering, why are we making such a big deal about this? It's just one report from a private company. And that's a great question. The answer is all about timing and what this report is famous for. It's basically the best crystal ball we have for the biggest economic number of the entire month.
So here's the deal. ADP drops their numbers early in the week. This gives all the analysts and economists a major clue before the official U.S. government jobs report comes out on Friday. So, when a shocker like this negative number hits, you can bet that right now, economists are furiously rewriting their predictions for that huge Friday report. And there's one more thing that makes this report extra important right now. See, in the past, sometimes the ADP number and the official government number would be way off from each other. But lately, they've been getting really, really close. They've been a much better match. And because it's been so accurate, everyone is taking this surprise drop very, very seriously. So, that leaves us with the million-dollar question, doesn't it? We've got 2 straight months of negative numbers and this big surprise drop in September. Is this just a weird fluke, a temporary blip in the data, or is this the first real sign that the super hot job market we've all gotten used to is finally, for real, starting to cool down? I guess we'll have to wait and see what that Friday report says.